Hey everyone, welcome back to Web3 Daily. Let's kick things off with a quick pulse check on the market. When I opened the charts this morning, I honestly froze for a sec. Bitcoin's just stuck in this macro-driven sideways crawl, hovering around 113k with no momentum. Ethereum's being a bit stronger, pushing toward 4.3k, and top alts like BNB and SOL are outpacing BTC slightly. Still, I gotta say it, market risk is still high. So don't go full degen on leverage right now. Now this one caught me off guard. China, yes, the same China that nuked crypto in 2021, is now apparently exploring a yuan-backed stablecoin, not a CBDC testnet thing. I mean an actual stablecoin. Think USDT, but for the RMB. Real on-chain usage, real cross-border utility. This isn't a rumor. Reuters broke the story. According to sources, China's State Council is reviewing a full roadmap to boost RMB internationalization. And at the center of that plan, a yuan-pegged stablecoin with rollout hubs set in Hong Kong and Shanghai. And I'll be real with you, I had to read it twice. Just a few years ago, they were banning everything. Now, they're plotting stablecoin strategy? Even crazier. This shift is partially in response to US moves. Remember how Trump's team launched US Dawn? That dollar stablecoin, basically. Let's put the dollar on every chain. China saw that and went, oh, okay bet. They're even planning to bring this up at the upcoming Shanghai Cooperation Summit later this month. That's not tech demo talk, that's strategic positioning on a global stage. Hong Kong already has a regulatory framework for stablecoins. Conflux launched an offshore RMB stablecoin just weeks ago. The PBOC governor even said in June they want to reduce over-reliance on a single sovereign currency. It's all connecting now. Here's what I'm thinking. If China officially greenlights this, it could mean one of two things. One, they'll stop choking all crypto activity and selectively open up legit, controlled lanes. Two, it's the start of a new power grab. Official stablecoins only. Everything else gets wiped. Let's not forget RMB currently sits at just 2.9% of global payments. The dollar owns 98% of the stablecoin market. You think they're not feeling that pressure? Bottom line, this pivot isn't about warming up to crypto. It's about not getting left behind. And if you can read the map before the road opens, this might be the signal you've been waiting for. Now let's talk about a major move out of Singapore. DBS, arguably the most heavyweight bank in Asia, just issued a tokenized structured note on Ethereum Mainnet, not a test run. This thing's live. These notes used to be high-ticket items, 6 figures minimum. Now, they've broken it down into 1K tranches and wrapped it into an ERC-based token, available through regulated Singapore platforms like ADDX and DGFT. They're targeting family offices and ultra-high net worth clients. The returns are structured with crypto exposure. It's a real product issued by a real bank on public Ethereum. DBS reported over 1B in tokenized volumes just in the first half of 2025. Q2 jumped 60% alone. This is no longer maybe someday. TradFi is already moving in. Don't FOMO this. It's not a price pump signal, but it's one of those quiet structural shifts where everything looks the same until it doesn't. Next up, SoFi just announced they're rolling out Bitcoin Lightning payments for cross-border remittances. That's right, Lightning. From SoFi. For real-world utility, you load USD into the app. It sends via Lightning, and recipients in countries like the Philippines or India get it in local currency. Near instant. Low fees. Real use case. SoFi holds a full banking license, so this isn't shadow finance. It's above board. If this works, Lightning goes from tech demo to regulatory-grade payments rail. BTC's value isn't just in holding anymore, it's evolving into a transfer mechanism. And now, even legacy fintech wants a piece. Now, this one's quieter, but carries serious weight. US banks are trying to kill Section 16 of the stablecoin bill. That clause lets state-chartered non-banks issue stablecoins across state lines. The banks are not having it. They're lobbying Congress to strip that clause. Their argument, why do these fintechs get to issue money while we're stuck under a mountain of regulation? The crypto lobby is fighting back saying, kill that clause. And you kill open stablecoins. You hand it all back to traditional finance. This might look like an internal US issue, but globally, it's a warning shot. If the US turns stablecoins into a bank-only game, China and others may fast-track their own alternatives. And that ties right back to the RMB stablecoin we just talked about. This isn't random. This is base layer financial warfare. Now here's a weird one. Windtree Therapeutics, a Nasdaq-listed company, just got slapped with delisting procedures for holding BNB on their balance sheet. They tried to do a treasury allocation like MicroStrategy, but with BNB, and Nasdaq wasn't into it. This raises a big flag. Public markets still don't know what to do with crypto on corporate books. How do you price it, audit it, hedge it? One misstep and boom, you're out. If you're thinking about putting crypto into your company treasury, tread carefully. It's not just market risk anymore, it's reputational and regulatory. BNB will be fine. But this incident, it's gonna make everyone pause before trying the same play. Now let's talk about Plasma. No, not the enemy. It's a new stablecoin yield platform that just launched on Binance. They offered a USDT lockup product daily interest in USDT plus XPL token airdrops. Sounds spicy? The market thought so. They hit 250 M in deposits in under an hour. But here's the thing, where's the yield coming from? If it's mostly token emissions, that's just musical chairs with logos. These products only work if they have real revenue underneath. Otherwise, when the airdrop hype fades, the exit window slams shut and someone's left holding illiquid bags. If you're playing this game, track the unlock schedules, vesting cliffs, treasury transparency. Otherwise, you're betting blind. And lastly, macro time. The Fed dropped its July FOMC minutes, and the surprise still hawkish. They're not in a rush to cut rates. Inflation risk still outweighs unemployment risk. Tariff impact still playing out. Asset bubbles, they're watching but not acting. That eerie silence in markets. This is why everyone's waiting for Jackson Hole later this month. Will Powell pivot? Probably not. They're scared of inflating another bubble. If he drops even a hint of easing, the whole market goes full YOLO. So yeah, risk assets are pinned. BTC and ETH gave up gains. ETF flows slowed. Even on-chain metrics, gas fees, stablecoin transfers, they're all dipping. This is the part where everyone's holding their breath. No big rally, no big crash, just tension. We're done for today. You'll notice the market isn't short on news. What matters is the underlying intent behind the moves, the pivot in tone, the capital rearranging in silence, the government suddenly sitting down at the table with new chips. We're not here to sell dreams. We just track the signals. See you next round.